Cross-border commerce and exchange of money and information is increasingly digital. That means that we need to have identity verification. I need to know who I'm trading with on the other side. At the same time, we don't want to sacrifice all of our privacy. This leads to the question of, can we embed identity into transactions, into the way that we're dealing with counterparties? Can we use cryptographic technology to help us protect sensitive or personal information? Can we do this in a decentralized manner where the ethos is one of trustlessness rather than trusting a known counterparty? With me to discuss this is Urszula McCormack, partner at King Wood Mallesons, based in Australia. She is a digital economy lawyer focused on questions of cross-border finance and technology. Urszula McCormack, welcome to the JDB Report.
Thank you very much. Good to be here.
So thank you for spending some time with me. I'm interested in the question around digital identity being used for cross-border payments or for perhaps just the transfer of records in general. And I thought you would be somebody great to provide some insight into what's happening. Your partner at King Wood Mallesons in Australia, but I think you kind of run around a lot of different places. And you're into issues around digital economy and cross-border finance and tech. I know you've been you posted on LinkedIn a book that you've contributed some writing to, which is all about control and ownership of digital assets. So, and I know you advise clients about what's happening in different regions and jurisdictions. So with that background, I'd like to ask you what you see in terms of when it comes to cross-border payments. We'll just keep it in that context. Where does the concept of identity play a role that doesn't, maybe is still informative or doesn't yet exist? There's plenty of trade finance infrastructure in the TradFi world, which is built around this, but it's what I think is trying to be replaced by digitalizing these processes, whether that's through APIs or blockchain. So could you share a little bit about what you see going on and what are some of the big opportunities or challenges in terms of what digital identity represents for payments?
Well, Dan, a huge topic, and so pleased to be discussing it and unpacking it. Digital identity can play a pretty significant role both for institutions themselves that are interacting with their own customers, and then for broader ecosystems that want to engender trust and confidence in the integrity of their arrangement as a whole. And I'll unpack that a little bit. Within the first context, you will have a number of jurisdictions where onboarding an individual is very straightforward. There are already efficient processes in place. But in other markets, it's far more difficult. So in some of the jurisdictions in which we operate, you might have, a significant archipelago for which, it is extremely difficult to have people to, show physical documents and to have them onboarded swiftly. And obviously that has enormous financial inclusion downsides and therefore financial crime risks as well for those markets and institutions. We see in markets like Hong Kong also really the efficiencies that come from digitizing national, jurisdictional IDs. As we see with the EHKD, we see that in Indonesia, as well that's bringing its national ID into digital form, because it means we can have a trusted interaction with someone with the source of truth in terms of their identity that's been credentialed,
Right.
through a centralized function. And I think that's probably, before we sort of move on to the sort of ecosystem areas, that's probably something just to remember, is that a digital ID could be an X handle, it could be, some sort of other profile. It could be more in that vein of national ID. So that context is really important. But certainly, when we've got a trusted digital ID, it can certainly streamline those interactions and engender trust. And I think what we've started to see more and more when we have interactions between multiple stakeholders, that there is a greater interest in seeing what that sort of digital identity might look like in not just a centralized form between institution
Right.
A and its own customers, but potentially in an environment where you have multiple people interacting, with one another. So for a classic correspondent banking situation, Bank A will have its relationship with customer A, Bank B will have its relationship with, customer B, and you have faith in the AML controls and so on of each entity in the structure to give you that confidence. But it's very different when we start to look at more innovative payment methods. And I know that you'll touch on digital assets as well, but that's where we need to go a step further.
Yeah. So one step back, or perhaps a giant leap forward, you were talking about government issued IDs. Um, in a in the blockchain world, the ethos, I suppose, is around trustlessness. And for some people, the idea of relying on a government ID is, it scares the willies out of them. Maybe they think they're going to be taxed or something. Um, so is that compatible with, let's say, meaningful e-commerce across borders using these rails to have, so the benefits, atomic settlement, instant and cheap in most cases, but can they really operate at scale, at true global scale, without the intervention of some sort of centralized, perhaps government imbued identity?
Yeah, look, it's a great question. For the way in which the market has traveled, which has been that for the centralized intermediaries involved in digital assets, AML KYC is fundamental. And,
Right.
the direction of travel from a regulatory perspective, from the perspective of the international standard setter, the Financial Action Task Force, we're doing all of those checks. We have to do those checks. And so digital identity can then therefore be a significant enabler by providing that sort of, yes, gateway and, friction point at the time of onboarding, but then a significant degree of confidence that, our hops work. So if I am a bank that has a crypto exchange as my client, and I'm supporting with their activities with respect to sort of clients, it gives me a significant degree of confidence where I know they're subject to the same rules I am as a bank, which is, where we're up to. Where
Yes.
it gets harder is in those decentralized interactions. And that's when we start to see trust still very important, but perhaps a little bit more flexibly integrated, and where creativity is required. And that's because you will always have the question of if I have any sort of identity at all, and even a private key is a form of, you might say, and public key and
Mhm.
is a form of identity. But there's a real question of how you credential someone into that trusted environment, and then what happens during the life cycle. So it's more complex and it requires more creativity.
Do you see in your work clients or participants actually using cryptographic tools such as zero knowledge proofs on top of these systems? People talk about it a lot. It sounds to me almost like a magic bullet where you don't have to actually reveal the underlying data. You can just show the credential, and that's good enough. It seems on paper that this would solve a lot of problems. And so I often will say, well, just put a ZK proof on top of that and your problem is solved. But I don't know if that's actually true in the real world. Just curious what you see.
Well, yeah, in the digital ID world, leaving aside blockchain altogether, it is absolutely, top of mind as one of the very valuable potential use cases. And what we see, we work with governments around the world now, around looking at the fundamental technology selection to be able to do that,
Mhm.
because you rarely encounter, and I won't exclude, the possibility that some jurisdictions want all the data, but even within jurisdictions, you will have the source of truth that might have all the information, but there'll be lots of government agencies that don't want it. There'll be private sector bodies that don't want it. The era of wanting more data has really moved to an era of recognizing that holding data is itself a liability of sorts. Well, it is, you need to protect it, and there's a lot that can go wrong. And so the ability to check on a yes/no basis, say, for example, whether or not we have a young person in Australia that can access social media from today,
Mhm.
it becomes very important to still respect privacy controls as well. So yes, we absolutely see that as a significant, topic that is regularly discussed and increasingly implemented.
Privacy is the flip side of a lot of these conversations when it comes to digital identity. From a legal point of view, do you see any jurisdictions that are making progress and trying to find the right balance?
I think I heard it best from a wonderful fellow legal mind, Jessica Miller-Schutzman, who has been involved in a number of projects, including Zcash and working with Kraken. But when I spoke to her as part of another event we held, a couple of years ago, she explained it well by demonstrating really that when you fail to protect privacy, you increase financial crime.
Mm,
Fraud is, the scourge of our time, and scams and so on. Uh, and I think seeing those two policy aims as conflicting has, been a problem.
right.
Over the last few years, you've got more and more call for collecting information. And I think that we're starting to see that tide turn, under GDPR and increasingly under some very sophisticated privacy models in a lot of other jurisdictions. And I think that recognizes the importance of finding those pathways. From my perspective, I think that the challenge has been up until now that those technology tools that enable us to respect privacy have been more difficult to implement,
Mhm.
but they're far more readily available now. And so I think that's the era that we're moving into, hopefully.
I wrote about a little while back about VLEI, virtual legal entity identifiers, and the potential to embed these into programmable money since it's software. Um, has that discussion come up with you? I know that there are some firms out in the world that have done this, but not at scale. Is this something that is feasible? Is it practical when you're talking about, say, payments across borders?
So yes, so one of the things that we observe, and our job is as lawyers, but often we're looking at the technology tools to
Mhm.
help support the legal side. But one of the things that I've observed is just how customizable technology has become. So even something as reasonably open as Ethereum has a significant number of tools available to permission a given structure, so that if you only want asset A to move between participants X, Y, and Z, you can do that. There are contract standards that permit that. There are customizations that are possible. We've also seen the rise of blockchains and smart contract tools that have been specifically designed, with that in mind, where the aim is that you credential someone into the network, and so that anyone you interact with has been pre-cleared to a certain standard. I think one of the challenges will, always remain that unless those participants are fully visible to you and you have a relationship with them, there'll always be that tension of, is there some delta? So if don't have a relationship with the person who holds a certain asset after 17 hops, is it enough that I know that they've been credentialed by someone to some standard, or do I have some additional duty? And I think that's where we've seen stablecoin rules really progress quite significantly to put quite onerous obligations on issuers to know what's going on with their token, to potentially intervene, to monitor and so on. So I think that the identification, that's certainly pushing us, in the direction of, systems that have a degree of permissioning to them.
What are some of the legal, I guess, challenges right now? We're speaking in December 2025, so looking ahead at the next year, what do you think you're going to be spending a lot of your time on in terms of trying to figure out interpreting what laws mean, or lobbying to amend these laws to make it safer for cross-border commerce to use these tools?
Yeah, so a few trends. First, on the digital asset side, we've seen the sweep of reforms in relation to AML. So, that in most jurisdictions, there's a regime for AML requirements to be followed by a set number of intermediaries. It generally tracks what the Financial Action Task Force recommendations say. And the next wave has been about the conduct rules of those participants. So, their licensing capital, consumer protection duties. We then saw some particular, rules around stablecoins that will continue. And what's slightly different about that area of regulation is that it's about the integrity of the asset itself and its structure. So some of those controls around lifecycle management of the asset itself.
Right. So on the token rather than the wallet or the blockchain.
Exactly. So you have the intermediary regulation, or the AML and the KYC for anyone involved, as normal, but it's around that sort of fundamental issuance and that entitlement. But one of the sort of edge areas that we're really seeing, evolve is the degree to which regulations capturing decentralized, actors, or decentralized applications and infrastructure itself. So a lot of the newer forms, the newer areas of regulation have in them quite flexible language that means that it's really not just your classic intermediaries that are caught. And I think that will be very interesting to watch. And that's where we see the biggest push-pull for our infrastructure developers. So the wallet creators, the blockchain developers. And in fairness, a lot of what they're doing is increasingly rich with various configurable products and services. So that suite, I think that tension point between sort of technology provider and, regulated intermediary is something certainly to watch.
Right.
And
At
then
what
just
point,
the
I
final
guess,
one I'll mention.
just to make sure I understand the point there, Ursula. So it's that blurring line between I'm just a tech facilitator versus I'm becoming a market intermediary.
Yeah, greatly summarized. Perfect. Exactly. That's right. That's right. And so that's a really sort of, there's a very significant policy sort of shift, but recognizes as well that infrastructure has become fundamental to service provision. So, but certainly even for our centralized intermediaries, the growth of very prescriptive technology and cyber standards has also had a ripple effect on those technology providers. But the final thing I'll mention is that in the identity space, one of the areas that typically requires, some local fine-tuning and reform is the recognition of a particular digital identity for a certain purpose,
Mhm.
or a framework for how it might be created. So if I am to use a digital ID for KYC and onboarding purposes, that I've got that specifically written into rules or guidelines, laws, then to enable a bank to accept that in a trusted way. So that's the other area that is starting to sort of kick in to
Yeah.
provide that certainty.
One person pointed out to me after I wrote the article about the VLEI point was that banks, we've been talking about tech companies and platforms, but banks are also skeptical of some of these things because they're less interested in an individual identifier, even if that is tied to a person, because people change and the relationship is not really with the individual, it's with the institution. So if you've got a legal gizmo that says Urszula is, CEO of bigcorp.com and she is eligible to sign off on the contracts, but then you get headhunted and you go somewhere else. Um,
Yeah.
are these issues, do these come up from a legal context or are these purely commercial considerations?
It's a combination of both. We went through a wave of, and this was now sort of probably 5 to 10 years ago when we were looking at the possibility of a KYC utility
Mhm.
in Singapore and Hong Kong and other markets, where the aim was that you would be able to credential someone once through a system, and that would be good, for multiple institutions, and that supports portability. The Consumer Data Right in Australia is another sort of example around portability of identity, and verifiable credentials. So a couple of things on that one. One, with the sort of utility aspect, there are challenges around the sharing of information, the reliance on something someone else has done. But fundamentally, it can come down to commercial consideration of who pays. And then if someone new joins, how do they pay? Who's responsible for it? Who builds it? How do we avoid vendor lock-in? So that's one thing. But then the other area that, the verifiable credentials piece is very interesting because you might have, for example, from a national registry, your core details like name, date of birth, and so on, but you might have a verifiable credential, in relation to your employment history or your educational history. And so then you have a wallet of those verified and verifiable credentials. And then through, the technological tools, they can be, tested by the user. And I think that's probably where we're headed, more towards is that sort of verifiable credentials piece that makes it easy to interact and reduces friction when moving from A to B.
Last question for you, Ursula, and thanks again for your time. To get some tangible advancements for the industry, where does the impetus, do you think, going to have to come from? Uh, is this is there a role for a regulatory push? Is this going to have to come from flexibility with traditional financial institutions, or are we waiting on the tech world to come up with just better ways of doing things?
It's all of it. I think the technology is now increasingly ready. And so that problem that we had several years ago, around KYC utilities was at a point where, you talk about zero knowledge proofs
Mhm.
and, the eyes glaze over. Very different conversation now. So technology's come a long way. Certainly, statutory recognition of what is good for an electronic record, for an electronic transaction and signature makes a significant difference. But similarly, all of the very proactive piloting that, some jurisdictions do with their regulators involved or with the likes of, the Bank for International Settlements, I think demonstrates the how.
Right.
And so that it's less scary, that it's, that there is a track record with trusted participants to be able to, make this work. But I think there is still an element of battle testing. There's still an element of, figuring out. And, I think then one of the challenges then is to justify the expenditure,
Right.
even for a pilot. So I think that we're moving in a good direction, but certainly it's the combination of those factors of that technological readiness, the confidence that regulators bring, and then that actual experimentation that occurs, by private sector participants.
And just to follow up on that, what areas of cross-border commerce do you think are going to be the first segments that will see more successes with using digital identity layered on, embedded within the processes? Will it be something like remittances? Will it be wholesale cross-border payments linked to trade finance? Will it be for SMEs because that's where the biggest need may be? Just where do you see the most likely areas that we can expect some advancement?
Yeah, look, I think you've nailed it. The ones that were top of mind for me were cross-border payments, high cost, and or domestic payments, but amongst distant, remote areas certainly, and then trade, expensive, complex, very opaque. So those areas can benefit significantly, from that, and have significant pain points as well.
Great. Urszula McCormack, thank you so much for joining me on the JDB Report.
Thanks so much.